Hello, everyone. It's that time of the year when economists and financial analysts share their insights on the upcoming financial landscape. As Warren Buffett once highlighted, waiting for these experts to guide you may not be the best strategy. One of his key pieces of advice is to avoid making investment decisions based on short-term predictions or what others are doing. If you're looking for ways to make good financial decisions during the 2024 recession, then you're in the right place. Because today, we'll talk about all sorts of mistakes, from spending on the little things to not having any plan at all. But before we begin, make sure to subscribe for more videos just like this. Let's dive right in. Buffett's philosophy emphasizes that pessimism is a friend to long-term investors, while euphoria can be their enemy. Reflecting on the 2008 recession, he navigated the market turbulence by investing in struggling companies like General Electric and Goldman Sachs, demonstrating a focus on financials and industrial cycles. As far as 2024 is concerned, if a recession occurs, then challenges like job losses, a decrease in available jobs, and reduced earning power might arise. Despite the associated problems, recessions can also be opportunities to build wealth. The saying that the rich make more money during economic downturns holds true. To help you navigate and potentially benefit from an economic downturn, we'll discuss 3 foolproof ways to make money using investment techniques inspired by Warren Buffett. On top of that, we'll explore strategies to set yourself up to withstand any recession, as well as some common pitfalls to avoid. Stay tuned for practical insights that may help you come out ahead financially during challenging times. Recessions can seriously impact personal finances and jobs. So, step 1. Build an emergency fund covering at least 3 months of essential expenses like rent and groceries. Aim to have 4 months or more if possible. This cushion acts as a financial buffer without touching your savings or investment capital. Once your emergency fund is in place, tackle high-interest debt. Pay down credit card balances to 0 if you can. This puts you in a better position if you face job loss during a recession, without extra monthly debt payments and less accruing interest. Now, on to point 3, inspired by Warren Buffett himself. Enhance your skills. In a potential economic crisis, companies may cut costs through massive layoffs. Show your value by building on your current skills or boosting your earning power through a side hustle. This extra income can build savings, pay off debt, and serve as a backup if your primary job is at risk. Speaking of extra income, let's explore 3 ways to make money during a recession. First up, bonds. Berkshire Hathaway, led by Warren Buffett, made a surprising move by adding $29 billion in short-term U.S. Treasury bills. Buffett, usually against long-term bonds, believes stocks outperform bonds in the long run. So why the change? It's clear he sees potential in them as a short-term investment during recessions. Government bonds offer stability, as during economic uncertainties, investors tend to flock to these safe investments. This increased demand causes bond prices to rise. The inverse relationship between bond prices and yields can result in substantial returns for investors. By selling these bonds at a premium, investors can capitalize on this opportunity to make money quickly. Following Buffett's strategy of minimizing risks, maintaining liquidity, and maximizing potential returns, government bonds emerge as a valuable option. Moving on to the second method of making money during a recession, investing in stocks. While it's true that recessions can lead to stock market declines, this period also presents one of the best opportunities for investors. Warren Buffett advises long-term investors not to be surprised by market downturns, as they are inevitable. Throughout history, there have been 22 bear markets with declines of 20% or more. Buffett's wisdom suggests that during a recession, investing as much money as possible in the stock market can lead to substantial gains. In times of economic downturn, consumer spending decreases and companies earn less, causing concern among investors. As these investors sell off portions of their portfolios out of fear or necessity, it creates a golden opportunity for those with available funds to invest in stocks at lower prices. This approach, if executed wisely, can be a path to building wealth during a recession. Thinking of investing during a recession? Think of it like a discount. If a stock drops by 25%, it's now 25% cheaper to buy. While it might seem risky, investing in low-priced stocks during a downturn can lead to significant returns when the market bounces back, which it typically does. Let's look at the last 3 recessions before the COVID-19 pandemic. The recession from 2007 to 2009, the 2001 recession triggered by the dot-com crash and the 9/11 attacks, and the 1990 to 91 recession following the economic expansion of the 1980s. In all cases, those who invested during the market's lowest points saw staggering long-term results. Timing the market perfectly is impossible, but historical data shows that even imperfect timing can yield substantial returns. Consider the example of investing in an S&P 500 index fund before the 2008 financial crisis. Despite imperfect timing, a $110,000 investment would have realized an 88.4% annualized return over the subsequent 13 years. Investing in stocks during a recession is essentially a bet on the long-term success of U.S. businesses. Over extended periods, it's a solid bet. Instead of trying to time the market, consider adopting a strategy called dollar-cost averaging. This involves investing equal amounts at regular intervals, allowing you to take advantage of falling prices while reducing the impact of market volatility. It's a straightforward approach to navigating the ups and downs of the stock market during uncertain times. Before diving into stock investments during a recession, it's crucial to consider a few key points. First, always ensure that you have enough money in your bank to cover 3 to 6 months of living expenses. This emphasizes the importance of having savings and emergency funds. Second, avoid buying stocks if you can't commit to leaving your portfolio untouched for an extended period. Investing during a recession requires patience, as short-term fluctuations can lead to portfolio value declines. Third, avoid obsessively checking your portfolio, especially during economic downturns with heightened stock market movements. Constant monitoring may lead to panic-driven decisions, risking potential losses. To succeed in stock investments during a recession, it's essential to resist the urge to check your portfolio excessively. If these criteria seem challenging, consider alternatives like buying bonds or exploring our third concept, investing in precious metals like gold. Despite not being as flashy as stocks or bonds, gold holds appeal for several reasons. Similar to government bonds, gold's value tends to remain steady or increase during economic downturns. It serves as a diversification tool for your portfolio and can act as an insurance policy against stock market declines. Gold also outperforms the S&P 500 by 37% during recessionary periods, according to global wealth management firm Schroders. Additionally, it serves as a hedge against inflation, preserving wealth when there's a risk of rising prices. Gold's historical role as a store of value makes it an attractive choice during economic uncertainty. Moreover, gold is considered a liquid investment and is always in demand, season after season. Unlike some assets, such as real estate, gold can be sold almost immediately, making it a handy asset for offsetting unforeseen expenses like a layoff or unexpected financial needs. So folks, in short, if you want to get rich in a recession, then you need to build an emergency fund, learn a new skill, and start a side hustle to earn some extra income. Invest in government bonds, invest in stocks, and lastly, invest in gold. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more personal finance and investing related content. Thank you for watching this video on fast ways to make money during the 2024 recession. Here's to becoming rich and financially free.